Welcome everybody. This is the Tuesday evening Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're absolutely in the right spot. Let's go ahead and get our disclaimer out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody does know you do trade at your own sole discretion. Alrighty then, so tonight's topic is mastering 3 trade types. But I'm going to put a crude oil chart up here. Anybody know what the 3 trade types that we take are? Anybody can name them off the top of their heads? Anybody awake out there? Hello? Everybody's still asleep. You need to have a little shot of espresso to wake up. It's okay. We'll cover them. But you know what? Before we can get into the trade types, oh, you were typing it in. Okay, yeah, mid-band. Mid-band's one. Minimum retracement. There you go. Deep retrace. There you go. Yellow bar probes. If you're just coming in, don't worry. We're just kicking it off here, and this is recorded. If you can't, people will come in late or have to leave early, we got you covered. We'll post it tomorrow morning on the web. But tell you what we want to do before we get into the actual trade types themselves. We have to, and I've been covering this in probably the last 6 or 8 or 10 webinars pretty extensively. I usually start off with what's called the market condition. And the market condition is simply, is the market going up, down, or sideways? Up, down, or sideways. So before we can start thinking about taking trades, the first thing we have to do is figure out what the market's doing to understand what, directionally speaking, we would do with the trades. So looking at crude oil right now, this is, by the way, if you're brand new or you're visiting us this week, what you are looking at is a crude oil futures chart. We are on the December contract. Crude oil is worth $10 per tick of movement. So that means that every tick, so for instance, between 55.20 and 55.30 is 10 ticks. 10 times 10 is 100. So each 10 tick move is $100. And we're plugged into a data feed from our broker, which is NinjaTrader. And we're on the NinjaTrader platform. This is a 4-range chart. This is pretty much typical chart that we trade every day. We have the crude oil, gold, Russell futures, and ES, the E-mini S&P charts in the live room. And what you're looking at here is our indicators running on the chart, and they are as follows. We have background colors, red, green, and intermediate. We have bar colors, red, yellow, and green. Or no, blue, yellow, and red. Right here, you can see them. We have this predictor, which is the oval sort of looking things, which are real-time support and resistance that paint in real time. You can turn those on and off like this. We have our power meters. These are basically the 4 trends that are on any given chart. And so when we say market condition, we're really talking about up, down, or sideways. So if we look at crude oil right now, are we in an up condition, a down condition, or a sideways condition? You can just type in U, D, or S. Up, down, or sideways. Excuse me. Let me take a sip of tea here and wake up a little bit. What is our friend Mr. Crude doing? You're looking over here on the right-hand side of the chart. This is the current crude price, 55.79. Yeah, it's up. Yeah, it was down over here, and now it's up. So let me go through the steps for us to take trades, and you can do this pretty much once you do it quite a few times. You'll start to get, you won't have to. You commit a lot of this to memory, and you'll quickly know what to do when you look at a chart. Okay, so the first thing we do, first step, is determine market condition. And that just simply means up, down, or sideways, right? Okay, so generally speaking, when we are in the up condition, that means long trades only. Off of retracements, right? Of course, the down direction is the quite opposite of that. Down equals selling the market short only. Oops. Short trades only. And this one is retracements. When you're in an up condition, you're taking retracements into support. That's where we buy. Right? Down is the opposite of that. Short trades on retracements. Not so good at typing today. Into resistance, which is the opposite, because we're selling it, right? And then how do we trade ranges? Sideways, or which is also a range. Basically, you're range bound, right? Anybody? How do we trade ranges? Anybody trade ranges? Any range traders here that trade the ranges? Most people don't like ranges. I understand. I still struggle with them after all these years. Truth be told, unless it's a large, well-defined range and it's an instrument I like and I've traded ranges on it before, I will go ahead and do that. If it's, if I'm not comfortable with the range setup, if the top and bottom aren't clear, then I tend to avoid those. And I just wait till market starts running in one direction or another, resolves itself. Yeah, you you buy support within the range. Yeah. So you're buying, right? Buying. And I'm going to put and or. Selling inside of the range. So let's do some exercises together, and I'm going to do a combination of determining the market condition and then looking at trade setups within the condition. And after we do a few exercises together, what I'm going to do is then have you as a team make the call by reconstructing and making it feel like we're looking at it all together in real time. So we'll do some real time exercises to make sure that you understand what we're doing here. Okay? And we'll look at different instruments too. We're not just going to spend the whole night on crude. But let's just start off with crude. Okay? All right. So some of the characteristics to tip you off that you are in an uptrend, obviously. And the first thing that happens in an uptrending move is what we call the thrust in the trend direction, which in this case is up. Several things happen on the charts visually when this starts to occur. Most prominently, of course, you can see that the background color changes to green, right? The bars are predominantly blue. The mid band, which is this thick, chunky middle band here, will take an upward turn, like such, and all the surrounding bands around it, right? So you got one band. We start the nomenclature starts down here. Band 1, band 2, line 2, band 3, band 4, mid band, line 5, line 6, or band 5, band 6, line 6 at the top of band 6, yes, the thin green one. And then we have, of course, band 7, and the outermost one to the top is band 8. And these bands and these lines feature prominently in our decision making when it comes to trading. Most of the trading is done around these lines within the confines of the bands themselves. So one thing we've talked about a million times, I think it's probably 2 million times at this point after over 9 years, is that we never, ever, ever buy or sell a thrust move. So when a market is thrusting in a given direction, this is where it is pushing. There are buying forces driving it upward. In the case of a downward move, the thrusts are down. So let's look at some examples, just very simple examples of thrust and retracement. Over here to the left, you can see that the pattern is as follows. You get. I'm going to show some thrusts. The background, notice in the downward condition, the background is predominantly red. Bars are red, except for yellow sometimes on retracements. And they can actually turn blue if they go into a deep retracement, and we'll look at that condition too. Okay. Here is the retracement in the short direction, like such. And then here is the example of another thrust. So these two areas here where you come up and you kiss the midband in a downtrending condition, are the short entries themselves. So here's a short right here. Here's a short right here. These are all kiss and roll shorts in the downtrend. Now these are considered midband trades. So let me identify how we speak to the three different trade types. Any trade that comes to, and I'm going to do it two ways. I'm going to show you how to look at it from both the long side as well as the short side on this chart. Now, if in an uptrend you come into the band just above the midband and just below the midband, or on the midband itself, this area here is said to be a midband trade. I'm going to go ahead and put that right on here. This is called a mid-band trade. Now, the reason we use boxes in our examples, in our teaching, in our training, and most of you know this, of course, but if you're new or visiting, you might not know this. Why are we using these boxes? Is because we have a semi-automated trading tool called Object Trader. And one of the main features of this tool is what's called a region box. And the region box, very simply, we have entire webinars dedicated to show you how to use this tool, so I'm not going to cover that a lot in detail here. And but essentially, you just take this region box, you engulf the cluster of bars that is occurring where you want to take the trade. In the case of the downtrend, you would enable short only. In the case of the uptrend, you would enable long only. All right. So in the case of the short side, when it's market selling off, a mid-band trade would be located somewhere in this area right here. Notice how here again, you're coming into the band immediately below the mid-band. It could sit and touch on the mid-band and go right around it, or it could come up slightly above it into this band 5 right here. Okay, so that's how a mid-band trade works, and we'll do tons of these in the next 45 minutes. So don't you'll see this over and over and over again, and be able to quickly spot them and identify what to do. Now, In the case of an uptrend, the minimum criteria retracement is as follows. It has to break and close below line 6, which is the thin green line here, and the stealth line, which is the sort of sneaky looking green line right here. So given that definition, let me ask you a question. Make sure you're awake. Do these bars that I'm circling with the cursor qualify as a minimum criteria trade, yes or no? Right here. Yes or no? Just type in a Y or an N. Does these bars right here that I'm circling meet the minimum criteria for minimum retracement long trade entry? Yes or no? Right here. Some of you might be new, so you're not sure. That's okay. That's what all this training is about. We help you see the trade so that when you take them, either in sim or for real, that you understand what you're doing, right? So yes, okay, so these bars here are closing below line 6, yes, check mark 1, and they close below the stealth line, and they are in the minimum retracement area, which is this band right here, band number 6. So yes, this is a yes. It's a heck to the yes. Who said that? Raymond. It's a heck to the yes. Yeah, there you go. Right there. That's a minimum criteria trade. Now, another follow-on question to this up move right here. Between here and the current price at 55.87, were there any other minimum criteria or other trade entries available for you to get in? Yes or no? From here, where this trade set up, the minimum criteria met, yes. And over here, where the real-time price is sitting right now, were there any other retracements of any kind for you to take, either minimum, mid-band, or otherwise? No. No. None of these have met the minimum criteria. None of them. All these retracements stayed above 6 and stealth. I mean, this one kissed 6 and stealth, but it never closed on in here. So that's the unfortunate thing is you know, when you're in a powerful trend, normally there are some retracements that allow you to get in. If you miss the initial entry, there's normally some kind of retracements, normally multiple retracements, where profit is being taken on the way up or down, right? So everybody's short, everybody's long, whatever the direction is. People see the thrust, the computer programs see the thrust, they start taking profits. In the case of the downside, they're covering their shorts, which is essentially taking profit on your shorts, yeah? And normally in a push like this, you would get some profit taking, and that's why these retracements occur. Now, there is an occasion where the market will go deeper, further than you expected. And in the case of the uptrend, that would mean that you could conceivably get bars that come all the way down into here. And we're going to look at that. We're going to look at this setup. Now, in the case of the uptrend, it's quite possible that the bars could actually turn the opposite color and be red. So you could have blue bars, you could have yellow bars, and you could wind up with red bars down here. Now, this is called a deep retracement. We've called it things over the years. We called it red bar probe, yellow bar probes, deep retracements, phantoms. There's various names for it. The bottom line in a trend is that the market has come beyond the shallow retracement, the mid-band trades, and gone down into this area right here. Now, that being said, a lot of people struggle with this trade, okay? What we're talking about is the bars come way down into here. I'm not going to belabor a lot of time. I'm going to go show you some of these. And here's what I've said this in other webinars. I'm not discouraging anybody from taking that trade, because in a powerful trend, if the trend continues, it can bounce from there, and that can be a very good trade entry. So what I'm saying, very to be specific, now in the case of the downtrend, of course, we're talking about bars going all the way up into here. That's called a deep retracement in the downtrending short arena, and the bars could actually turn the other color of blue. Now, it is quite possible, and I think Gary covered this extensively in his webinar last night. If you were there, I think you saw it very clearly, where what makes people nervous here is that if this deep retracement could turn into a bona fide trend change. And if that's the case, and you're buying here, and the market does a little bip-de-doo like this, and then tanks, you could conceivably get stopped out. I think that's the fear of taking these trades. In the case of the short deep retracement, you would be shorting up here. The market does a little bip-de-doo down, maybe a little bit in your favor, depending on your fill, and then and then flips around and takes off like a rocket, stopping you out. Now, if I'm going to say two things in regards to this trade in this condition that I'm describing. First of all, you need to practice the deep retracements in sim on your chosen instrument and try to find out if this type of trade is for you. So this is the third type of trade, right? We have the minimum retracement trade here and here. Well, I don't have one. Well, here, this is a little bit of one right here on the short side. We have the mid-band trade. We all understand that. And we have the deep retracement trade. I would strongly urge you. Oh, let me circle back. Todd, the way this works is when you engulf an area, generally speaking, there's different entry ways to position the region box. The most popular is close outside of the box. So in the case of the long trade, you'd be filled long on a market order on the close of this bar right here for this minimum retracement trade. In the case of the short trades, depending on when you drew the box, over here you would be filled short market order on the close of this bar right here because it was down only, and so you're only taking shorts. And like I said, over here, depending on when you turn the box on, you could conceivably have been filled on this bar right here or definitely on this bar right here. So that's how that works. Okay? Everybody see that? That's how that works. And the reason it's semi-automated is because the only real work you do is to get the you hit the hot button, the box shows up near where the price is, right? It just shows up here, so it's actually going to sit like over here like this. And then you simply, as the bars are coming into the area, you position it, and then you hit the toggle it on. It goes on, changes color. And inside of Object Trader, all the things to manage the trade are automated. The targets that you have, if you have a scalp target and a runner, will get placed. Let's say hypothetically you had a 10-tick scalp and a 20-tick runner. That would all be put on the chart, and you can move them around in real time. The initial stop will be up here. If you have 1 lot, 2 lot, whatever, 10 ticks, that all gets put up here. These are one cancels the other. You get the scalp off. That takes it to 1. And then you can also set up, of course, the trail stops. So what I'm saying semi-automated is the only real work you do is positioning the box. Once it's turned on, it carries the ball from there. And like I said, you can take those targets and stops and move them around in real time. Let's say, for instance, you got your scalp off at 10 ticks here, and then you had maybe a 40-tick runner, and it's sitting way down here somewhere, and you're concerned it's not going to get it because you're dinking around here, and you don't want to get stopped out and give all that back. Well, you can just drag it up, and it'll take it out, right? It'll fill it. So what I strongly encourage you to do on these deep retracements is try them in sim on your instruments. If you find you get some consistency, if your win rate is good and you're seeing them and you can take them and make money on them, then by all means continue to take them. If you struggle here with this deep retracement type trade, phantom trade, and you keep getting stopped out, and for some reason you get kind of spooked, and you got red bars down here, and you're thinking it's a trend change. Well, then this is a trade you want to avoid, which is okay because you can still take the minimum criteria trades, on the shallow retracements. And of course, you got the mid-band trades all day long. We're going to show all three because there's lots of traders with us all over the world that trade all three. Okay? But you don't have to necessarily take all three. In fact, some traders I've heard, not much, but a few, struggle with the minimum retracement trade in here. Now, if that's, if you want to be a well-rounded trader with lots of tools in your toolbox, it behooves you to learn all three and practice them daily. Okay? If you find that any one of these three are not profitable consistently, and you just try them, and let's say you get the deep ones and you get the mid bands, and this minimum thing, you just, for whatever reason, you just can't seem to get it. You keep getting stopped out, and it's just a mess. Well, then that trade might not be for you. Yeah, I see your thing there, Jake. I don't know that that's accurate, so I'll just leave it at that. Okay. All right. Are we ready to look at some trades? Tell you what I'm going to do. Before we do the real-time exercise, let's look at some examples of deep retracements. So that's the only one on here, really not shown, so you can get a flavor for how this works. And let me put it in the context of this, more or less this way. All right, let me go back today to between about 10:20 and 11:20. There was an hour on crude that looked like this. Now, what is the market condition here? Up, down, or sideways? It's a little bit trickier. The one I showed you earlier was kind of a layup. It was pretty straightforward. You could very clearly see when you were going up and down in those strong, powerful up and down trending moves. Now remember, there's combinations too. I mean, let me give you some examples. You might say something like, well, that could be, sideways to up. It could be sideways to down. So there are times when the market just isn't, purely going in a trend direction. There's a blending of situations there sometimes. Let me go back and help you with this. Here's what was going on before we went into this. Okay, so here was earlier in the morning. This is like 9:30, 10 o'clock. Here's an example of a deep bar probe here. Here's two examples. These are where they go into the outermost band in a downtrend and kiss line 6 and roll over and give you the short. I'm talking about right here. You can see that the bars turned yellow. The trend is down. You kiss and roll off the outermost band 6. That's a deep retracement phantom type probe rollover for a short. And here's another one right here. Now, when you take these outermost band trades like this, your scalp goal is to get back to the mid band. And that's how you can judge whether the trade worked out. Okay? If you get back to the mid band and get some kind of scalp out of it, then and make money, which both of these did, of course. You can see this one plowed right through it. So you got your scalp off. Did you get a mid band trade set up? Now, this is the other thing. Many, not all the time, but many times, a deep retracement can also turn into a mid-band trade when the market pauses at the mid-band, like right here. So in this condition here, where there are actually two separate trades, yes, there were. There was this one, paused at the mid-band, and you got a secondary chance to take the short right here. See that? Did it happen over here? Well, I don't know. It plowed through here pretty quickly. Let me draw it more like that. Here's another one over here. Do a few together here. And here's another one here. This is a deep one. Bars turned blue. Didn't get a midman on that one. It just plowed right through it, and then down she went. So what makes this area here particularly challenging, and this is not unusual because I think a lot of the crude trading is done by like 10:30 Pacific time. I'm here in California, so this is Pacific time. I would classify this area as sideways to down. Sideways to down, mainly because you're coming off of this powerful sell-off up here, and you could make the case that you're getting still lower highs and lower lows, like such. You're in a downtrending channel. And I know it's challenging because when you look at this, there's a lot of times where it goes way out to the outermost band, actually changes the background green, and you start to come to believe when it happens that that could be an actual trend change occurring. Yeah, there's fake outs, Jake. Absolutely. Happens all the time. Let me ask you this, though. No, we don't do it after the fact, Jake. We do that in real time in the room. Have you been in the room? Yeah, we actually call those out ahead of time. Yeah, we're not armchair quarterbacks here. Trust me, we've been doing this a very long time. I've been trading over 20 years, 23 years, and 10 years owning the business of Viper with Gary. So I think we have a pretty good idea of what we're doing. And, you know, when markets are at different levels and you're in a trend, we normally call those levels out ahead of time. We help you spot them. So here, let's do this. Let me address your point. Let's take this off of here. So I always get this once in a while come up. No problem. We can address it. All right. Here's how you do it. Let me show you how you do this. Here you can see the market was trending down, right? Trending down. Yeah, I'm going to do some real-time, I see your comments coming in there. I'm going to do some real-time exercises, and you're going to see how we're able to see things happen in real time. I'm just taking this time to explain how it works. That's the explaining of teaching of how it works part. But we're going to work some charts together, and you're going to actually be able to spot the trades, and we're going to reconstruct a real-time condition. Just give me 1 minute here. Now, here's what you can do. Here's how you can do this first thing in the morning before the market opens. You can do it anytime throughout the day when the market is running. What do you do when you try to identify whether a market's in a range or not? How do we do that? What's the first thing we do when we're trying to figure out if a market is range bound? Anybody remember what that is? Is this thing on? You guys, anybody remember? Draw the lines. Good. So now at 10:45, where might we put some lines? Well, we put them at the swings. Here's a swing right here, right? As it's happening. Put lines on the chart. Another swing right there. And you can make the case that you have sort of an interim line more or less in this area right here. Now, we say that the old saying that we have is that if it remains within the confines of the lines, you are said to be range bound. So we did this at, well, you could have done it at, this swing was known at 10:30, and this was known about 10-15 minutes later at 10:45. So you could have drawn these lines at 10:45. Now let's advance the chart. What's happening here? Here we're all, this is a half an hour later. We're all the way over here to 11:15 now. So what I'm showing here, and you can do this at any time throughout the day. I do mine in the pre-market session, and then I adjust them as the market moves. Gary does them in real time on the chart. So everybody knows how to draw the lines. But the lines are what help you see the range. If you didn't have the lines, you could still spot the range. I mean, you could visually see it, but it makes it a lot more clear to have the lines. However, as it goes working its way through this range, what jumps off the chart to you as you're looking at some of the breadcrumbs that the market leaves behind for you to observe? Yeah, as you're going in the range, it's starting to, like here, for instance. Now, you can obviously see that it's a very large range. You're staying within the confines of it, technically speaking, but you're starting to break it to the downside. So this is pretty, yeah, you were getting a series of lower highs and lower lows. So it was becoming evident that a trend change continuance to the downside was imminent. And of course, you can see that happen right here. And selling kicked right back in. You break support. You get your first kiss and roll short right here. Your prior support now becomes resistance, and now you're selling rollovers in the downtrend. Does everybody see the difference between? I just want to make this crystal clear, and then we're going to move on and do some real-time exercises. Can everybody see the difference between when a market looks like this and when a market looks like this to the right? Range-bound trading, sideways price action. Over here, you're in a downtrend. The other characteristics are that the background looks like a striped shirt. There's no consistency in background color. The bars vary between blue, yellow, and red. You can make the case they're mainly yellow and red because you're still kind of in a downtrending motion, only in a big range. So this is said to be sideways to down. So you're still actually shorting this market. Coming off a downtrend, you're going sideways, the market's consolidating, and then you resume the downtrend, and so in this condition. And that makes it tough. It's tough to take shorts up here when the bars are blue. It looks like a trend change, and the background turns green. Yeah, and so you understand why I'm saying now that if that trade's not for you, you're going to learn pretty quickly whether that trade's for you or not. If you take a couple and you stop out and don't trade the deep retracements. Okay, everybody ready for some real-time exercises? I'm going to try to cover 4 charts. I'm going to start with, let me clean the charts up here. I'm going to give you some real easy ones. Drawing tools, remove all drawing objects. Okay, there we go. I'm going to start with crude. We're going to do some crude ones together. And then we're going to do, I'm going to get some gold over here, and we're going to have Russell and wrap up with the S. All right, let's do some exercises together. I'm going to do, let's see here. I'm going to do the long side first, and then I'm going to do some shorts. Okay, you ready? Okay, these first couple are going to be lob. I'm going to just be lobbing the ball up to you, real soft balls, so you get a flavor for how this works. And then I'm going to start cranking it up and making them tougher. Okay, so I'm going to help you with this one. You're looking for a long trade. Ready? Here's how this works. I'm going to start the market at a position, and then I'm gradually going to advance it. And when you think there's a trade, you can type in L for long or T for trade. All right? Let's do a couple together. Here we go. Real-time market. We're watching crude oil and the overnight European session. And the market was right over here at 2:56. This is your night owls. 3 o'clock my time, 6 a.m. Eastern. So here goes crude. Oops. Let me get it going here. Okay, we're at 308, 316. Remember, when you see a trade, you type in T for trade or L for long, either one. Here's 3:16 a.m. Pacific, 3:22. $3.35. You blow the bars up a little bit bigger. 3:48. 3:51. 3:55. The bar is super big here. Okay, I'm going to stop it. All right, time's up. Wow, I'm really shocked. And maybe, I don't know, if everybody gone to sleep, or you're not awake, or you don't know what you're looking at, or maybe some combination of both, or maybe some of you are having dinner or playing with the dog or cat or something here. But a few of you typed in trade when the market was sitting here, and that is correct. Does this meet the minimum criteria for a trade? Close below line 6, yes. Trend is up. Here's the thrust. The good news is I didn't see anybody type in trade when this was going on. That's the thrust, yes? We get a minimum criteria here. We close below line 6 in an uptrend and below stealth. That is a long trade, yes. And then many of you typed in trade when it sat right here. And that is correct. That is the definition of a mid-band. Bar is sitting right on the mid-band. All right, good. Everybody see how this works? Okay, let's do a couple more together. Okay, now I'm helping you out. We're going to do one to the short side. Okay? It's going to be a short trade you're looking for. Yeah, the first one, I don't think you made much on that, Jake. Yeah, the first one, I don't think you made much on that one. You didn't get a stop. By the way, if you get into a trade and it's not working out for you, what do? It doesn't go your way almost immediately and starts pulling against you. What do? Anybody? We talk about this all the time. Sometimes they work out. You dump it. No, you don't pray. You don't get in. If you're the trader that gets into hope trades where you get in and you just let it run and you start saying, "Oh, I don't want to get stopped out, but it's moving against me. What am I going to do?" Well, you dump it. You dump it and you look for reentry. Market close button. Just get out. Minimize your losses. Get out and go to the choppa. All right, here we go. Here's exercise number 2. I'm going to help you out. This is going to be looking for shorts. Ready? Here we go. Now, in this case, you'd type in S for short. Here we go. This would have been crude at about, what would this have been? Early in the morning, early into the European session. Midnight would have been right here. So you're coming out of the Asian session where you were in an uptrend, and you're going into the European session here, where the big banks in, France, Paris, and London, all the big banks over there are starting to trade futures markets. Okay? All right, here we go. Okay, now you're at right before 1 a.m. Pacific time. Okay, now you're at 1:03. Right? Okay, 1:11. Okay, there's 1:19. Blow the bars up a little bit more, bigger for you. Okay, it's 1:19, 1:27. 1:39. 1:49. All right, I'm going to stop it there. All right, good. I saw you chiming in there too, Jake Aru. Good for you. You see how it's we're recreating in real time how this works? You can see it in real time. We got tons of traders all over the world do this every single day. I do it. We all do it. That's how it works, right? Yeah, here's your minimum criteria trade. Just barely. Closing above line 2 on the short. Yes. Wicking and breaking stealth. Check mark 1, check mark 2. Short. Now, you might have got to stop out. You might have got a quick scalpy here, maybe, depending on where you got filled. And you probably got stopped out right here. Now, you had reentry. Almost all you got this one. This is mid-band kiss and roll. You got 2 of them. You had one here, and you had another one right here. Good. See how you wait for those retraces? Yeah, you don't trade the thrust. You wait for the pullback. That's how you do it. And the more you do it, the more you see it. The more you see it, the more you do it. and then becomes second nature to you. You start making money every day. Let's get a gold chart down here. Here we go. All right. Let's get a gold trade going here. All right, I'm gonna make the I'm gonna make these a little tougher. This is not. Maybe I'll start with an easy one and work my way up to a couple of tough ones. Gold's pretty choppy sometimes. Most of you know that, right? You know, I mean, there's times when gold behaves itself, and there's times when she doesn't. And when she's not behaving herself, you gotta really stay out. If she's behaving herself, what I mean by that is respecting swing levels and you know, trending in a nice orderly fashion. If she's chopping around in these tight little ranges, you really want to just stay out of all that mess because it can take your money real quick. It's $10 a tick. Yeah, gold has been really bad. I'll do one exercise on gold, and we'll quickly get over to Russell and ES because those puppies move, and that's where we make most of our money. All right, I'm going to help you again. Looking for shorts. I'm going to go pretty quickly from 6:30 start time all the way through the first 2 hours of gold. Here we go. Type in an S when you think you see a short. We're starting right here at 6:35. Ready? Here we go. S for a short. Get those bars nice and big juicy bars. Okay, now we're at 7:54 a.m. Pacific time. That's all the way to the end of the market. All right, time's up. Okay, so I started you off, I started you off in here somewhere. So many of you typed in S when gold did this. Does this meet the minimum criteria for a trade, yes or no? What say you, team? Is that a legitimate short trade on gold right there? Yes. So you got it. And then it comes back up into here. Is this area a legitimate short trade up in here? There's two chances, technically speaking. There would have been one right here and another one right here, depending on when you drew your box. First one didn't give you much. Now, depending on your fill, you know, I don't know if you got filled on the close of that bar right there and you had a 12-tick stop. This could have been one continuous trade. If you didn't like it, you could have dumped it and then reboxed it right here. Okay, good. Let's get the Russell done here. Which one do we want to do first, Russell or ES? Show of hands on what you like to trade. Well, whichever one is more popular, that's what we'll bring down first. Just type in RTY or ES, whatever one you like best. Russell's been really moving. Same with ES. There's just so much volatility. We're having a great fall. These are the times where you got to really make some money. Really make some money on these markets. Definitely. As long as there's a turmoil overseas and tariffs, nuclear programs in North Korea, all sorts of problems worldwide, it's going to fuel volatility. OPEC, you know, always stirring the market with oil. We got a few ES and a few RTY, so I'll just randomly choose the Russell. We're going to do some exercises together. Markets have really been selling off, and so I'm going to help you. We're going to be looking for more short trades. And this would have been after we closed the room, starting at about 9 a.m. Pacific and running all the way until 10 a.m. You ready? Here we go. This is the Russell, 9 a.m. to 10. And I'm going to start right now. Get those bars all blown up real big for you. Remember, when you see a short, you type in an S. I'm going to pick up the pace. There's 9:18, 9:21. There's 9:25, 9:28. There's 9:34. There's trades here. I don't know if you're seeing them. And there's more than one. There's more than one on here. I can tell you that for sure. You haven't typed anything in yet. And I don't know if maybe you're not paying attention, but there are trades here. Russell just sold off like a big old dog. Okay, here we are at 10 o'clock. All right, let me just stop it right there. Well, the good news is that I didn't see one person type in the letter S signifying a short trade while this thrusting move was going on here. So that's encouraging. You are obviously seeing the thrust, and you know that that's not the place to get short, is at the apex of the sell-off. That's where, you know, people are going to start taking short profits and short covering, and that's why a lot of traders stop out, because they get in at the apex of the thrust. You don't obviously want to do that. So there was a number of different short setups here. I'll just highlight them quickly because I do want to squeak ES, and I'm almost out of time. Here was one right here, obviously. See that one? This is a mid-band to deep probe. See how he came slightly into that next band up there? Another one right here. Give you a little scalpy. Another one right here. Filled short on, depending on how you drew the box, one of those two bars right there. There's another one right here. Most of you caught this one. This is a minimum criteria trade. Met. And this one you got to scalp off. This you got to scalp off and stopped out. This one you got a little bit bigger scalp and a stop out. And then this was the chicken dinner of the morning right there. That thing went all the way down from 33 to 26. This trade here was, you know, let's say you got in at 32.50 and you got out at 27.50. That's 50 ticks. This is a 50 tick drop. That's $250 a contract. Put a 2-lot on that, and that's 5 bones right there. Plus the scalpies. You know, it adds up. It adds up. It really does. Let's get ES over here. Yeah, I see your numbers there, Brian. You got it. Okay. Here we go. Now, I'm going to show this in both a 2 and a 4. I personally trade the 2 on ES because, you know, it tends to be a little slower and a little more choppy sometimes. And if you have a 4, it tends to sort of blend the retracements all together, where you can't sort of see them as much as you normally would on a faster chart. So, I mean, but it's a personal choice. You know, if you like a 4, you can put a 2, a 3, or a 4. That's all acceptable on ES. Let's go back to the open. Give me a second, please. We'll do some exercises together. I love ES. Between the ES and Russell, that's probably 85% of the trading I do right there. You know? I just love those instruments. Every morning I trade those things. Every single morning. All right, I'm picking up some spots to do some trades together here. I'm going to start at 7 o'clock. Actually, it's closer to 7:30. I'm going to clip through this pretty good. I'm going to go from about 7 to 8, 8:30, 9 o'clock. Are you ready? Let's do it together. And then this is the final exercise of the morning. Final exercise of the morning. I will help you out. I'm not going to tell you what you're looking for. You figure it out. And you're just going to type in a T. Now, if you think you know what direction you're taking, then you put that direction in. So if you think you're taking a long, you would hit L when you think the trade is setting up. Or if you think you're taking a short, you would simply put in S. Okay, here we go. Right here at 7:39, I'm going to start to advance the chart, reconstructing real time for you. Blow the bars up a little bit here for you. So right now we're at 7:41 a.m. Pacific on ES. All right. Here we go, advancing the chart. There's 7:40, there's 7:41. Okay, there's 7:42. The bar is even bigger if you want, so you can see them a little better. Okay, now we're at 7:42, 7:43. You know, to the extent you participate in these exercises, it's going to really help your ability to see real-time trades on your own charts to take for yourself. 7:44. Sorry, I got a tickle in my nose. Oh, sorry. Excuse me. Yeah, I got a tickle in my nose for some reason right there. 7:44. 7:45. 7:46. 7:49. 7:50. 7:51. 7:53. 7:56. There's 8 o'clock. All right, that's it. Let's recap. I'm just going to quickly show these because we're running out of time here. I think I started showing this chart over here. Here again, here's the thrust where we went from short, from down to up. So we were clearly in an uptrend position, and you were looking for long trades, long only in the uptrend move. Okay. Here was one right here. Some of you got that. Here's another one right here. Some mid-band trade. Perfect. Love how ES respects these swings. That's why I love to trade it. It's not so spazzy because it's so heavily institutionally traded. There's so much volume, 1.5 million contracts coming through here. All these programs, when they're buying together. So you can see here we were sideways to up, right? Through this region right here between 7:43 and about 7:55. You spent about 15 minutes in a sideways to up condition. So these were all buy retracements here. Buying retracements, buy retracements, buy. All of them. Every one of those was long. You even had a minimum criteria one right here. Close below stealth, close below line 6, check mark yes. And that turned out to be the killer trade of the morning right there at 7:56. That thing ran like a rocket. Let's talk about how much this trade is worth right here. Let's say you missed everything, and I didn't really talk too much about trail stops, but essentially you're going to use line 6 and stealth for your trails. And let's say you got taken out somewhere around in here. 45 3/4, and you got filled at, I don't know, let's use some round number. What is that? 45 3/4, and you got filled at, I don't know, 32 3/4, just to make it easy. 32 to 45 is 13 points. How much is ES worth per point? So you got in at 32 3/4, roughly, and you got out at 45 3/4. 12 points. What's a point worth on, no, a full point. A tick would be 12.50, and there's 4 ticks per point. So 12 points would be $600, roughly. One lot on this is $600 right here. Let's say you didn't get any of these, nothing. You didn't get that one, you missed that one, you were asleep, you missed that one, you were making coffee, petting your cat when you got that one came along, and you spotted this one and you pulled the trigger, trail, 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 take it out up here. Two lot on that trade's 12 bones, $1,200. Gonna stop recording.